Listening to the Real Estate Financial Coach podcast, financial planning topics for real estate investors.
Welcome to the Real Estate Financial Coach podcast, where we talk about all things real estate and financial planning. I am Scott Jensen, a real estate investor and financial advisor, and the co-host of the podcast, as well as co-founder of the Real Estate Financial Coach course. And so today I have the pleasure of interviewing Cynthia Meyer, founder of Real Life Planning and a business partner of mine in Real Estate Financial Coach. We've known each other for a number of years and have collaborated on, I don't know, like a dozen different
Many projects.
And so it's my joy to be interviewing Cynthia here. So Cynthia, for everybody, what is important to know about you?
Thanks, Scott. As you mentioned, I'm the co-founder of the Real Estate Financial Coach course and program. I'm also a real estate business owner. My husband, Steve, and I have a portfolio of residential rentals. So we own single family homes, some small multifamilies. Those are 2 to 4 doors, right? And recently, about 2 years ago, we did a 1031 exchange into our first apartment complex. So we're trying to scale up and increase the number of doors that we have over time. I'm the founder of a financial planning firm that coaches real estate investors called Real Life Planning. And in our firm, what we do is, I like to say it's where financial planning and real estate meet. So I'm financial mentor, a combination of a financial planner and a real estate business coach in the day-to-day life.
Super interesting. Tell us just a little more detail about your real estate portfolio. Like, where did you start? How did you get to where you are now?
Oh, sure. So we bought our first property during the Great Recession, and we were first generation real estate investors. Neither set of our parents had been real estate investors. My husband, Steve, he's a first generation American. His family immigrated from South Africa when he was a baby. His parents are physicians and they were not real estate investors. My parents were not real estate investors. So we were really doing it for the first time. When the Great Recession happened, if you recall, there was a year where the S&P 500 went down about 46%. It really wasn't fun. And at that time, I'd been a financial planner for a while, and we had really been powering on saving aggressively. And we were investing in the securities markets. We're still heavily invested in the securities markets, but we were trying to live off one income. But we were saving aggressively, and we were hoping to be work optional at some point. And when the Great Recession happened, we took a step back and said, wait a minute, we are not diversified enough. Just being stocks and bonds, for example, that is not enough. We need to diversify into other asset classes. And so we started to do some research about direct real estate investing. Of course, great time to get started as a real estate investor, especially if you had cash. We looked at 4 markets in the country, and then we eventually settled on one, and we built a team and started there. We started the first single family home that we bought. I think we bought it for cash, and it stayed vacant for 10 months. So we were really nervous in the beginning. Like we had budgeted a much larger amount of money to get started, and we didn't get it rented. So really nervous. But eventually we did get it rented, and then we started to buy more. We bought more properties. We bought some for cash. We bought some with mortgages, and we got them rehabbed and rented. We use a professional property manager, so we're more hands off. Our properties are in a different state. And we just saved all our net rents. And when we had enough, or we had bonuses coming in from work, we would buy another property. We built and scaled over time. We don't have a huge, it's not gargantuan portfolio. We have 6 properties, including the apartment complex. Over time, we did things. We took good care of our properties. We raised rents to market levels when we had vacancies. And if we did a long-term lease, we're raising them in small amounts, right? Nothing drastic, just to keep pace with the cost of inflation that our expenses are going up over time. Eventually, that was enough in combination with the other things that we'd done for my husband to be work optional by the time he was 55, which was his goal. He left his corporate job and he's focused more on the financial management of the real estate business at this time. I was able to leave my job in workplace financial wellness and start real life planning in 2019, just a month or two before you started your firm, right? You and I independently came up with this idea as real estate investors that we wanted to do financial planning for real estate investors. Yeah. So a couple of other things about our real estate business. We are more hands-off. I think you guys are more hands-on. And we have an awesome property manager and her team. They're just amazing, but a very important part of our business, and an investor-friendly realtor, and a whole team that we've built up that helps us grow and scale the real estate portfolio.
Yeah, if you're not going to be local, you need to learn to delegate quick. I think the downside of being local is you can do it without delegating. It's harder to delegate when you have the ability to literally just drive there and fix something, or drive there and meet the tenants, or drive there and do whatever needs to be done. Whereas if you live far enough away, that's not a possibility. You adapt, right? You come up with a solution, you find somebody to help with the problems that come up. And you guys have done that quite successfully. You had mentioned a thing, which I think is shocking to a lot of first-time real estate investors, if there's anybody listening in that sort of audience. But I think when we're talking to first-time investors, oftentimes what they're thinking of is, okay, how do I save enough for the down payment? And then I put down all of my money on this house, and then I rent it out the next day. And then it
doesn't always happen that way.
So you said 10 months of vacancy on your first property.
Yeah.
How did that happen?
I'll say a couple of things about that. First of all, it was across the street from a cemetery. So it was a beautiful property, but it was across a big, like sort of a boulevard, right, with traffic in both directions. And it was like on a corner. And so the street itself was not across from the cemetery, but there was a cemetery like close. And I guess that really affects whether people want to rent it or not. With the help of the property manager, who did a nice little rehab of the property. It was really beautiful, nice little 3-bedroom house, but it didn't rent right away. The other reason it didn't rent right away is that it's harder to rent a long-term rental of a single family home during the middle of the school year. It went on the market in the middle of the school year, and we didn't rent it until the school year was finished and people were ready to move. It's in a very good school district. I think that was also something that we wish we would have known.
Yeah. It's easy to underestimate the things that you just don't know that you don't know, right? Yeah. And I certainly would never guess that being that close proximity to a cemetery would have that much of an effect.
It may or may not have, right? I'm just guessing. But but it was certainly a learning curve. And in retrospect, looking back on it, we wish that we would have had, given how inexpensive properties were at the time, we wish we would have had more confidence to go all in, all at once, and not be so tentative and say, okay, we're going to do one, then we're going to do another. Let's wait and see how it goes. We wish that we would have used more leverage in the beginning, and we could have bought like 4 and used leverage at the same time. You know better, you do better. We've had great success with real estate. As a real estate business owner, we've really been successful, so I can't complain.
It is always so much easier in hindsight saying, oh, I should have done this, I should have done that. There are examples there that leverage could have made things worse. With what we know now, of course, leverage really compounded your returns seriously.
So interestingly, when we bought, we were looking for metro areas where the rental homeowner relationship was upside down, meaning it was cheaper to buy a home than it was to rent a home. Of course, and interest rates were very low at the time. That's not true now, except I think recent research has shown there are 4 metro areas in the country where this is still true: parts of Houston, Cleveland, Philadelphia, and the Detroit area. But in general, in most areas of the country, it's cheaper to rent than it is to buy in a lot of places.
Sure. Pivoting over to the financial planning business, let's just talk a little bit about that. Like, how do you work with real estate investors in your firm?
As I mentioned earlier, I like to say I'm a combination of a traditional financial planner and a real estate business coach. In my firm, Real Life Planning, I work with people who are scaling their real estate portfolios. Typically, these are busy professionals or business owners who have a significant real estate side hustle, and they're looking to scale the number of doors that they have so they can eventually be work optional. I also have a financial coaching component to the business where I'm spending some time working with new real estate investors investors, helping them get into their first property and get their real estate business off the ground. As we both do, I look as real estate as a business, right? In the financial planning engagement, I treat the real estate investor as a business owner, if you will. Certainly, real estate may be treated in most circumstances as passive income on the tax return, but we know as real estate investors, there's really nothing passive about real estate, right? Somebody is managing the property, somebody is maintaining it, somebody is screening the tenants, etc.
But Cynthia, you
Yeah.
have a property manager, so it must all be passive.
But the thing is, it's not, right? So there's still lots of decisions to make, lots of financial decisions to make. We have to decide whether we're going to buy and sell a property, even though we have, we have a wonderful property manager who is screening tenants for us and dealing with the day-to-day toilets and trash type issues. But it's still a business. And like any business, you have to run it. In this process that I have a financial planning process where we look at all the traditional areas of financial planning, estate planning, retirement planning, college planning, tax planning, and risk management from the perspective of the real estate business owner, from the perspective of somebody that's growing and building and scaling their real estate portfolio. So 100% of our clients are real estate investors, or what you might say, real estate curious, right? They're getting ready to be real estate investors. That is the focus of the firm. We don't do anything else.
And so how do you charge for what you do?
Sure. So I work with a lot of people who are very DIY. As real estate investors often like to do things themselves. And I have an upfront planning fee to cover the initial financial assessment, and then a monthly subscription. There's a financial planning subscription, and then there's a financial coaching subscription, which is a little bit less for people that are just getting started. And that's how we work with people. Under some circumstances, we do manage securities for people who do not want to be DIY with their securities portfolio. And part of that is included in the subscription fee for financial planning. If they have very large securities portfolio, it's a little bit extra.
So the client has the option whether they want to manage their own stock market or whether you're managing them for them.
That's right. If somebody is a financial planning client, if they want a second pair of eyes on their securities portfolio and they wanted to do an investment policy statement that includes their securities and their real estate, they want portfolio coaching. That's something they can get from me. If they want to be hands-off with the securities portfolio, they can also do it that way as well. But I would say that the main focus of what we're doing every day is we're working with the real estate investor who is actively looking to buy more properties, right? So they're evaluating deals. Their corporate structure is getting more complicated. They've got lots of tax planning questions. They're wondering how their real estate decisions fit in with the other things that they need to save and invest for, like retirement.
I'm curious, I don't think I've asked you this in the past. When you started your firm initially, or before you started your firm, did you know of any other advisors that were doing work anything like what you're doing now? I
did not. When I started my firm, I had come from a workplace financial wellness company, and as part of that work, I talked to corporate employees all around the country. Some of those people were financial stress type situations, and some of them were regular questions about 401ks and things like that. Because I was a real estate investor, I often got the questions for people about who were real estate investors and all these questions that they had. As I was starting the firm, I thought, where does my life and the financial planning business intersect, right? Who am I called to serve, right? And who can I impact with my personal experience and story? Helping real estate investors, I thought, was something, it's just not part of the traditional financial planning curriculum. It's not something that people were commonly doing. I'd heard lots of stories from other investors about what experiences that they'd had talking to what they thought was a financial planner, which was really just a financial salesperson. I thought this is a unique opportunity here. This is the great blue ocean, if you will, to serve those millions of real estate investing families in the country that aren't currently getting good financial guidance from a fiduciary financial planner. And that's how I got started. I think that's how you got started too, Scott. Luckily, we met and found each other and started collaborating and talking and realizing that there's a limited number of people that we can serve individually as financial planners, but together we've created a curriculum and we've started to build a community of people who are trying to pay it forward and impact the profession. That's my personal goal, is to impact the financial planning profession so that we have better guidance across the board for these millions of people.
One other question, there was a hypothesis that this would work as a business, but you didn't know of anyone doing it. I didn't know of anyone doing it. How sure were you that this was even going to work?
I was 100% sure. What I wasn't sure was, is the fee model on track, right? Is the way that I've built, not so much the way I built the planning process, but is this something that people want to engage with the financial planner on an ongoing basis, right? And so there was a lot of experimentation in the beginning, to talking to people and doing discovery calls and getting feedback about, in the initial couple months, about what were people really looking for. And so that's how I started with this idea that real estate investors, the kinds of folks that I was looking to work with, they were really focused on the real estate area of their personal wealth or aspiring wealth. That's where the focus of the planning engagement should be for me.
Sure.
Yeah.
You talked a little bit about, I think, paying it forward a bit. What drives you in your business or personal life? Just like, why are you doing the things you're doing?
Yeah. I think what really drives me is I'm looking for my whole life. I've always wanted to teach what I've learned, right? Before I became a financial planner, I worked in another field and I created courses and workbooks and classes and things like that. And then I went to work as a financial planner, and I built my entire book originally when I first went to work at Merrill Lynch in the mid-90s by teaching educational classes about different financial planning topics. Then I worked in finance, I focused on the real estate, and I worked in financial wellness. And I taught classes and webinars and wrote columns for Forbes and things like that. And so I think if I learn something, I just want to teach it to other people. It's so much fun.
I agree. Yeah. What's the use of just learning something if you can't share it with somebody else? Yeah. And it's cool as advisors, right? We get to see somebody's situation and give them this little kernel of knowledge or this different way of doing something and see how it makes their life better.
There's so many great ideas. Certainly, we haven't, in the real estate financial coach community, we haven't even begun to mine all of the cool things that people are doing and all the great ideas that we're learning and sharing in our community. I've been a financial planner for a long time, since 1997. I think when I first got my Series 7 way back when. And all of this information about finance, it's public information. Right? This is the CNBC generation. It's all public information. If reading changed behavior, we'd all be really rich and really thin, right? People often learn through the relationship, right? I like to say that it's the relationship that gets results. So there are people that are meant to learn, and they're meant to be your clients, to be Scott Jensen clients, people that are meant to be Cynthia Meyer's clients. Everybody has a certain audience of people that when they bring those basic concepts to them in their language, right, in their way of looking at the world, in combination with what that planner has to bring to the table, then the people who need to hear them will hear them, if that makes sense to you.
Yeah, yes, it does. I couldn't agree more. What do you wish that financial planners knew about real estate investors?
Like we talked about in our conversation about your business, Scott, I think I wish that financial planners knew that real estate investors had more in common with the entrepreneur, with the small business entrepreneur, than they do with a typical securities investor. The real estate investor, they may be buying property, but it's just another way to invest in themselves, right? They are betting on themselves by being a direct property investor. Their ability to choose good property, their ability to build their team if they're hands-off investor, their ability to renovate and rent out the property if they're a hands-on investor. Right? They are investing in themselves by building a real estate business. And adopting that as a paradigm for the financial planning or the tax planning engagement, super helpful, right? It helps you think about, oh, if this person is a small business owner, then I know exactly how to coach them in the financial planning engagement.
I think too often we tend to think of it like a client owns a single stock, right?
Yeah.
And we're saying, oh no, you
And it
should maybe
does not.
sell some of this stock, and that's not at all helpful.
My grandfather owned a Texaco station. I can't imagine if somebody had come to him and talked to him and said, oh, sir, if you just sold your Texaco station and put the money in stocks, you'd be better. That's how he made his wealth for his family, is because he had this Texaco station.
Can you imagine some advisor doing some sort of analysis and saying, oh, it looks based on my analysis that this won't make any money? That's literally how I made the money. Like,
Yeah. Lots of academic research shows that it's not stocks or real estate. The mighty engine is stocks and real estate together. Right. That's what reduces the volatility of the total portfolio. That is really the mighty message here.
Right, absolutely. It's a diversification play. You can increase the returns without increasing the standard deviation. Yeah. We'll leave it at that. We don't need to get more deep. So other way around, what do you wish that real estate investors understood about financial planners or financial advisors?
I want real estate investors to know that there are some financial planners who do understand real estate, who own real estate themselves, and who can give you good guidance about all the questions that you have about how does this impact your retirement scenario? How does it impact the FAFSA or college planning? How does real estate impact your estate plan? How does it impact taxes when I'm thinking about buying or selling a property, for example? There are financial planners, not very many of us, but there are financial planners right now who do understand these things. We are, as a personal mission, you and I are looking to mint as many new financial planners as we can who are trained in real estate financial planning and coaching, and who really can give informed and wise guidance to the real estate investor.
Absolutely. That's the point. Cynthia, what's the best piece of advice you've ever received? That's a big question.
Yeah. I think the best piece of advice I had ever received, I was doing some life coaching trainings. I've done 2 life coaching programs. And the piece of advice was to make decisions from your future self. That a lot of times we look back in the rearview mirror and we say that has to determine what we're going to do in the future. And the guidance was to look towards your future self, future you 10 or 20 years from now, and make decisions from working back from that place, right? Instead of looking in the rearview mirror and trying to project forward.
That's really good advice. This has been great. Where can folks find more about you online?
My financial planning firm is called reallifeplanning.com, and we're on LinkedIn and Facebook as Real Life Planning. I'm on Twitter, but not very much. On Instagram as at Rental Property Club. If you're interested in learning more about working with real estate investors as a financial professional, you can go to the Real Estate Financial Coach course.
Excellent. This was so good. I'm looking forward to doing a lot more of these.
Excellent. All right, Scott.
All right. Sounds good.